Yellow Corporation is climbing back from the depths of hell this week, up over 300% on the week on news that Apollo Group is going to be saving the company. So the company is finalizing a deal to save the company through financing for the trucking company. Apollo owns most of Yellow Term's loans. So Yellow has been teetering on the brink of bankruptcy for weeks, unable to handle its debt load. On July 30th, Yellow sent out notices to customers and employees saying it ceased all operations. Customers said at time of disruptions should be limited after many shifted their cargoes to rivals in recent weeks. So the company has more than $1 billion in debt maturing soon and has been unable to refinance. Yellow took a COVID-era loan during the whole COVID fiasco and from the government totaling about $700 million. So Apollo is trying to save the company desperately, and this is because Apollo owns most of Yellow's short-term loans. Or term loans, I should say. So if Yellow was to go under and Apollo is being owed a bunch of money from the company, they're not going to get that money. So it's in Apollo's best interest to help keep the company afloat and keep its operations going so the company is able to actually pay back its debts to Apollo. So this is a very self-serving savior type of situation, right? We have Apollo stepping up to the plate and providing financing for the company, but it's really for their own pocketbooks, as they would be out of significant money if Yellow went under. So with that being said, I'll cover some of the short interest numbers for the company. I think it's somewhat relevant given the recent rise we've had in shares. So short as a percent of float is at about 19% of the float is sold short. And that was actually, we saw shorts increase 15% over the past short interest period. For those that don't know, short interest gets updated twice a month. We just had a recent update last week. So, we saw an increase in shorts over the past 2 weeks. And now over the past, couple days, I guarantee a large part of that move wasn't buying. It was really just short covering. So not shocking to see Yellow kind of run up here as shorts cover their shares. And then also we have a days to cover of 3.4, which basically implies that it takes 3.4 days of average volume to cover the shares that are sold short. Typically when we're looking for a short squeeze, we look for a number over 10. So 3.4, not screaming a short squeeze, but this high short percent of float at around 20%, and expectations for the company to go under definitely are exacerbating and causing somewhat of a short squeeze here for the company. So with that being said, I'll take a look at the financials for the company, and at the end of the video I'm going to give a price prediction on the stock, so make sure you stay to the end here. But with that being said, we can see here that the price to cash flow is at 1.02, which is a good number when you compare it to the sector median of 14 times, and then a decent number when you compare it to the 5-year average of the company as well of 5.6. So really the company isn't making money right now. Probably wouldn't be in that whole debt fiasco situation that is obviously leading to a potential bankruptcy if they were profitable. But so the company isn't profitable, but its EV to sales number is actually pretty cheap relative to this sector. So EV to sales is at 0.32, and that is below the sector median of 1.8 and basically in line with Yellow's 5-year average. And then let's take a look at some of the growth numbers for the company. So we can see that revenue growth is at minus 7.9%. So, 0.79%. And this is below the sector median and below Yellow's 5-year average. And revenue growth is actually expected to continue to slide over the next 12 months. Projections are for 3.5%. So, financials and the valuation and the growth numbers look pretty poor. Although it is good to see that the company is making money for what it sells. So gross profit margin is at 11%, which is below the sector median, but is well above Yellow's 5-year average of 9.5%. So, we're seeing gross profit margins look pretty solid for the company when you compare it to its own history. And then net income margins basically flat compared to the sector median of 6.25. And then the company has $2.98 of cash on hand. So this kind of tells you that the company does have a decent floor in terms of cash. So, $3 in cash is 75% of the market cap, right? So 75% of the market cap is in cash, which is definitely a decent number. But you always want to take that with a grain of salt, because anytime we're taking a look at a company's cash position, it's all relative to its debt, right? So if the company has $2 in cash per share, but it has $20 in debt per share, then it's really not much cash when you consider it, right? So with that being said, I'll take a look at the company's balance sheet quick. So for Yellow here, we have $154 million in cash, and we have $1.6 billion in debt. So the company has $1.46 billion more debt than cash. So that's obviously a very unfortunate situation, and isn't shocking, right? To see an unhealthy balance sheet for a company that was about to go under here. So with that being said, I will give my price prediction for the stock. So shares have topped out around this $4.20 level back in February of 2023. It's also where shares had consistently topped out in June and May of 2022. So this $4.20 level is a significant level of resistance for the company, and we've seen shares fall from this level over the past couple of days. So what I'm looking for with earnings today is, if we're able to move higher off of earnings, I want to see us close one daily candle above this $4.20 level before I kind of dove headfirst into the stock in terms of in terms of a trade. Obviously, honestly, long term, I wouldn't touch the stock. The financials look absolutely horrible. But if you're looking to trade off of this company, I would say this $4.20 level is one you should be watching. And it's also worth noting that we moved above the 200-day moving average for the first time since August of last year, which is obviously a good sign for the company. And I would really want to see us move above this resistance level before I jumped into shares, though. So momentum looks solid for the company. We are above all daily moving averages, which I do love to see. But obviously, there's a lot of other factors at play with this company. We need to obviously see earnings come in good, and we need to see the company just freaking survive at this point. So purely from a technical standpoint, though, I am waiting for this $4.20 level to hold. If we do hold this level, I think it's very likely we could see a move back up to resistance at about $8.40, which would be almost 100% gained for the company. And I picked this $8.40 level not randomly. This is the next really major level of resistance for the company. So this is where shares had topped out in August of 2022. It's also where shares had topped out in March of 2022. So definitely a significant level of resistance for the company. So be on the lookout for that level. I think we get a 100% move if we are able to hold this $4.20 level for the company. So be on the lookout for that. And also, I'll go through this seasonality trend for shares. So the company has a 50-year history on the stock market. Would be a shame to see it kind of come to an end here, but August is typically a bullish month for shares. So in August, shares typically rise 0.6%. And it's in September, shares typically drop 3.9%. In October, shares typically drop 2.8%. And in November, shares typically drop 3.4%. So this kind of bullish seasonal month here could lend some support for the stock, although I wouldn't call this the end-all be-all. Obviously, there's a ton of factors here at play for Yellow. So with that being said, be on the lookout for that $4.20 level. I think we likely if we are able to hold this level, I think we likely move up to about $8.50 over the coming week. So that is my prediction for Yellow here. Obviously, a great sign to see that that Apollo Group is kind of coming in and saving the company. But with that being said, proceed with caution with this one. Obviously, the financials look absolutely horrible. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.